All right, hello everybody, and welcome to the second video of this weekend for market action that ended the month of February. And I've been tweeting a couple maybe rather cryptic things about GLD and suggesting that this one chart that we're looking at here, a 15-minute chart of GLD, could be the most important chart of the week. And you might be thinking, why on earth would Wes suggest that if there was one chart to look at this week, it should be his 15 minutes? So let me see if I can explain. So I want to begin by reminding of the two main bullish triggers that I've been talking about for precious metals and then hence for mining stocks, which I've been building a significant amount of my portfolio around them due to my expectation for outperformance. And those two things have been a continued weakening US dollar and increasingly more negative real interest rates, which would be suggestive of increasing inflation. Unfortunately, what we've been seeing, and we especially saw this during the day on Friday, which was a terrible day for metals and miners, strengthening in the US dollar and increases in US Treasury yields. We've been seeing quite rapid bond sell-offs. We've been seeing very weak US Treasury auctions. So what is being suggested about the weakness in the bond market? And why would this be affecting metals? And why would I say that I could just use a chart of GLD and tell you this week, after looking at the end of this chart for the week, what the US dollar did, what the 10-year Treasury yield did, what oil did, and what the S&P 500 did? And it has to do with those things that I just mentioned. If there is heightened uncertainty in the bond market, what is this suggesting? This is suggesting that there is uncertainty about sovereign debt conditions of the country. If we're worried about solvency of bonds, if we're worried about credit, we have a big problem on our hands. Even companies that have very healthy balance sheets rely on overnight paper lending, monthly lending, rolling over bonds, in order to provide the cash flow that they need for day-to-day, week-to-week, month-to-month operations. And if there is fear creeping into that market, absolutely stocks are going to get hit. Why? Because it becomes more expensive for companies to do business. And what's the expectation for the future when it becomes more expensive for companies to do business? Well, for them to become less profitable. And if they're less profitable, what's the expectation for employment? You get the picture here? That's why I'm saying that what I think happens in gold this week is actually going to tell us quite a bit about the underlying health of this current financial system. So, what do we need to see in order for the markets to find support? And I am suggesting that they are correlated, that stocks and gold are going to move together, whether up or down. We've got to see that US dollar reverse, and we've got to see those interest rate increases subside. In other words, we've got to see stability and strength come back to the bond markets. If we don't, that worry is going to be the trigger for a massive sell-off. And so you may be thinking, wait, I thought gold was a safe haven. I thought that in a risk-off environment that investors would turn to gold, and I don't believe that's true. What I would say is if we're looking at a credit crisis, if we're looking at a debt and bond issue, that gold and silver will be sold to cover margin calls on stocks. And I think that is a little bit of what had begun to happen during the month of February. Okay, so I will talk through the details of this chart. I will talk about what I think are very, very clear levels that we can look at to see whether or not the bullish trade in metals and miners is still ongoing. Like I suggested with stocks, there is the possibility that gold has put in a significant top. And that's where I want to take you now. There is a chance that gold has just put in a super cycle high. And I'm using GLD as the proxy. Yes, it doesn't have nearly the history of actual pricing gold or gold futures. This is only about a 15-year-old ETF. But the recency of this, I think, is valid to clue us in what is happening now and can we use this to make some projections. And you're going to see there in red. If the crisis unfolds as it could, then it is possible that we could see an undercut in the price of gold by 50%. And that would be, I can't use a different word, it would be devastating to anyone who has put a lot of money and a lot of belief, a lot of emotional investment into this sector. Okay, we need to pay attention to what damage was done in the month of February. So we're going to see here in GLD, looking into that monthly candle, we're going to see from January a rejection at the top of this potential bull flag. I'll talk about why I use the word potential in a bit. We saw rapid selling to the end of the month, and we saw a loss of the 13-month EMA. There's technical damage. We have a bear cross rollover on the MACD, and we have an RSI and a Stochh reading that is pointed downwards at a 45-degree angle. It's like what I said in my stock video. Metals right now are trying to swim upstream. And it takes an enormous amount of energy to overcome that. So there's 3 counts that we have to consider. And again, if that level of variety is uncomfortable to you, my suggestion is that you don't follow Elliott Wave. I'm not going to be offended. There are many, many ways to make a buck in the market. I'm going to show you why I like Elliott Wave because of that very reason. Because the possibilities give you invalidation and validation levels for decision making. So what do we see? My primary black count is that gold put in a significant, I would call it a generational low in late in 2015, and we are marching up in a primary 1, 2, and we're not yet done with primary 3, which would explain why this almost parabolic move, and the move in the summer, it was parabolic. Why that is occurring? Because it is, again, within the most bullish part of the Elliott Wave sequence. It is within an intermediate 3 that actually finished at the end of July of a primary 3 of a cycle 3. We get that picture. I've explained that before in videos. And we're trying to figure out if this intermediate 4 has found a bottom. Now, because I do give my primary count, I give it the most bullish, or if we're downtrending, the most bearish that's reasonable within probability. I think if 158.53 is traded into, that black count is dead. You cannot have a wave 4 into 3 violation, a wave 4 into 1 violation within any degree wave 3. It is not allowed by rule. If something trades overlapping within a wave 3, it's part of a different structure. It's not part of a bullish or bearish impulse. If that happens, we are then looking towards the blue count, which for the blue count is a much less bullish overall picture for metals and then hence for miners. It would be suggesting that there's only one final leg to run up that I would propose would happen in mid to late 2022, and then we're going to see another significant pullback before we can actually reach this super cycle high. And that is valid all the way down to the top of where I have marked P1. Okay, now what that means is if you're in this trade and 158.53 breaks, you have a very, very difficult decision. Your decision then becomes, by a most bullish count that I can see, it's now invalidated. I see that it could bottom anywhere between 158.53 and 131.15. So what do I do with my positions? And my suggestion would be, and this is a trader's dilemma, I get it, is what if the count is actually red? And if the count is actually red, you're going to be much happier to sell at 158 than to get caught selling at 130. Okay, and I'll try to talk through some of those in more detail for decision making. So that's giving you here the macro picture. Okay, now I had mentioned that with GLD that this is only a potential bull flag, and I want to talk about that. It's only potential because to the way that I have parallel channeled this, from top to touch, we only have one touch on the bottom, which is suggesting, unless you count this red and this green as two touches, which I'm nervous to do that for back-to-back months. I like to see some spacing to verify that this is actually a bull flag. It is suggesting that when March starts, perhaps we need to hit that lower channel. Now, based on, if you trust the precision of my work, it could still touch that lower rail of the channel and not invalidate my intermediate one at 158.53. And I would call that the stick save of stick saves for anyone in this trade. I'm going to say it's possible. If we see, and I'm going to be using the weekly and daily and 15-minute charts. They're going to be probably the ones I'm going to be looking at the most this week. If we see a loss of the lower rail and 158.53, then we have to be very worried about how low would the blue go, and are we falling all the way down potentially by the way this Elliott wave would fib out in a really nasty primary 3 correction, probably to the 200-week MA. And that is not good news if you're a gold bug. Okay, so I hope I raised your level of heightened awareness in my stock video. You need to see it again. We are at a crucial inflection point on what's going to happen. Now, I would also say this, that there were some traders in this section that when this price, 194.96, was traded against, they said the bullish bet is off. I'm not counting it that way because I'm not counting this as a low and 1, 2, 3 to give a 4 into 1. That's why I've moved this one to here to give a little more space for that to happen. Okay. If you were in my classroom right now, I would say, what questions might you have? But you're going to have to save those for Twitter or YouTube. Let's move on into the channel on the daily. And here I think it becomes more clear. Why do I think this is not yet a completed bull flag? It's because by the way that I've channeled, we only have one touch on the bottom. My suggestion is, if the bullish resolution is going to happen, we have to get a channel touch and save. Now again, we can break 158.53, then we're running the risk of how low is that going to fall. And that, I'm telling you, even right now, I haven't decided. It probably also is going to have to do a little bit with what silver is doing, but we're going to talk about that in a minute. So I am anticipating at some point this week a lower rail touch. We're going to see if that happens. When? I don't know. Okay, I'll talk now about the 15-minute. So for the 15-minute, let me just say what would be the most difficult scenario would be that immediate gap down. That immediate gap down, I haven't even placed it on the chart, but that immediate gap down puts you in an immediate decision. What do I do about these positions? Knowing how low they can go in red and blue. Okay, so I'm actually just going to leave that out there for you to chew on. I want to talk a little bit more about how you would use a bounce, because I've suggested in my stock video that we could actually see a bounce that's actually reversing. And I want to give you the levels that can help you make that decision. Okay, so there is a significant down gap within what I'm charting as a minor 3 of primary 3 of the bear count. If that gap cannot fill, that's your next huge red warning flag. If it cannot fill, we're going to have momentum to the downside. That's number one. If it does fill and it can't pass the 0.618 of the move down that was rejected from the channel, if it can't pass it, that bearish 0.618, that's clue 2. And I've given you similar clues in SPX and QQQ for what to look at. That would also likely correspond to this 200 period 15-minute moving average that you guys know that I use for my day and swing trades. That would be the gap and crap scenario. And that actually is going to give us some time to think and decide. And to be honest, if we're going to get a big bad bear move, that's actually the one that I prefer. Okay, what if it keeps on going? What if the bounce is strong? Well, by the way that I've counted this internally as a 1, 2, 1, 2, 1, this 2 can't go above this minor 2. That's why I've placed that fib that you can see right there as a visual marker. If that happens, this is now a full 5 wave leg, and we're now looking for the invalidation of this level. See, this is why I like Elliott Wave. It gives me the ability to create a count with probabilities and validation versus invalidation levels. So what's going to help us as bulls in the sector sleep easier at night? We have to see GLD above 175.51. That's the level. If it can do that at some point, let's say over the next 2 weeks, then I'm going to be sleeping a little bit better at night. Okay. Now, what about that nasty gap down? My suggestion to you is we can have a move through the rail that could reverse. What I'm going to be recommending is that any daily closes beneath this lower rail should probably be your trigger to get out of the trades. And I need to chew on that some more because, as I've said, I've invested a significant amount of not only financial capital, but mental capital and a little bit of pride, I'm not going to lie, on the line here for this bull count. But if we get daily and then for sure a weekly closing candle beneath this potential bull flag, I really think you just got to guard against the red bear. Why let a 10 to 15% loss turn into 50? Okay. Now, that doesn't seem like good news. And again, can we get the stick save? Absolutely. We're going to have to see some fundamental changes though in the macro picture. We got to get some help, and it's got to happen early this week. GDX has been extremely weak. And I want to talk about how you could have felt at the end of January, you could have felt just kind of a little slapped around into Feb. Why? Because at the end of January, things weren't looking so bad. However, we may have disregarded that outside bearish engulfing candle. I got a little bit taken away with a hold of this longer term, what I thought was a support line, thinking that maybe we had actually finished its intermediate 2. And we were suckered in because the beginning of the month we gapped up. And then for the rest of the month, we had some carnage, down almost 10%. In GDX, we see monthly closes now below the 21-month EMA, and that is not good news. Again, I'm suggesting we might not quite have enough of a touch to that lower flag. However, it now is, in my mind, a bona fide bull flag, because if I connect from top to the X wave, which makes sense, that's the high of the move and the high of the corrective move, we get 1, 2, an overthrow, but a third, and then look, actually on Friday we got the 4th touch. So this is giving me a little bit of hope. Maybe we do get that stick save, and maybe right at this 50% fib, maybe we've seen the bottom in GDX. Okay, a little bit of hope. So we're gradually maybe going to increase the hope factor here. But obviously, just like GLD, it really was kind of the mid-channel here, the median line, has been the rejection line. And if I'd been a little bit more clued in last weekend, I would have said, I didn't do a video and I should have. I would have said, if we get rejected here, we got to get out on anything short term. And look, we got the rejection, we had to get out. You're going to see it here on GDX. You got the rejection right there. That was on Monday, and you got to get out. Okay. So, and that was Tuesday's candle. You got to think, wow, if it can't get back to the median of the channel over it, I got to get out, at least for short-term things. Okay. So that's GDX. And so clearly GDX is going to follow. If gold rallies, I think the stock market rallies, and I think miners rally. It's that simple. And then we've got to quickly reclaim the middle of this channel, because that's going to help us reclaim here these moving averages. All right, so SLV looks a lot better. However, because of what I'm suggesting about the potential bearishness of gold, I got to put in a bear count on silver. I don't think it would fall nearly as far. Now, we know how important silver is now in an industrial capacity. So not only do I still consider it a currency, I do. It also now has applicable use. We know it's going to be big if the EV sector continues to expand. Already used a lot in semiconductors, smartphones, etc. So I don't think it would fall nearly as far, but it would be painful because those in this sector are more bullish on silver than they are in gold. So a fall back to this breakout area as a second back test, you cannot rule out. It would involve a loss of its own upward trending channel. That I would also tell you right now is speculative because it only has one touch to the upside. So I don't actually know if this is actually a valid bull channel because it hasn't confirmed by getting up here to a potential P3 or cycle 3 high. Okay, so with SLV, I'm going to maintain my bullish count, thinking we get the stick save. Its weekly is above still all of its important MAs, and that is a really good sign. So then you're left to wonder, is silver going to cause gold to rally, or is gold going to cause silver to stumble? I don't know. Maybe I can give you an answer by Wednesday. But we can see that if this top goes in, you're going to get a repeat of what silver had all the way from August to the end of November. It's just going to do it again. And that's going to be incredibly painful. You're not going to see these upside targets in silver. Why? Because it cannot yet break the pivot at about $25.50 to $26. It's tried 1, 2, 3, 4, 5, 6, rejected, 7, 8, 9, it's tried 11 times. Okay, so I have said before, the more a resistance area gets punched, it's waiting for the knockout blow, the haymaker. But at some point, you're kind of like, maybe it's just exhausted. And it just can't go 15 rounds even to get a TKO. So We've just got to be ready. And that's what I'm hoping to do is I just want to clue you in. I don't want anyone caught holding the bag here and holding this all the way on a drawdown. We just have to know when we're going to get out. And again, I'm suggesting we got to use GLD first as our clue. Okay, so this just highlights here the inability of silver to break out. On the daily, it's now beneath the 8 and 21. And you guys know, and many other very credible traders out there, they say we don't have an active bull trend if we're not closing above both the 8 and 21, and we just lost them. So if that continues, we can expect at least a degree lower than 24.06, and at worst, we can expect a primary bear move. Okay, there's only one individual name that I would put out you, and I would say this because some individual names still look very good, but even in a name like AG, something concerning happened at the end of the month. This up-angled breakout line was lost, and it was very disappointing to see the top of this candle at a 19.29 lost on a closing basis. That signifies that we possibly have a fake breakout. I'm not yet putting a bear count on here because I want to see what happens with the metal space first. But know that it is possible that we do have some sort of intermediate degree top. My suggestion here for AG, if it happens, is that this is an intermediate one top, which actually ultimately would be more bullish. I can start to show you that on the smaller time frames. Here we do see a nice cup and handle. Here's the false breakout and a kind of a concerning weekly candle. It lost this pivot. There still is some hope that even a pullback within this sub-degree move, even if this is an intermediate one, and we pull all the way back to, say, the 50-day SMA, could actually be ultimately more bullish because we're going to be extending the degree after that pullback to even higher levels. That would be extremely painful in the short term. Maybe that's what the market wants. Maybe it needs more shakeout. Maybe it needs more uncertainty. You can hear it in my voice. You can see it on the charts. I have a high amount of concern going into the start of the week. It's extremely important that we see resolution to the upside. Otherwise, we just got to be on guard. So as always, I hope you're finding these educational and informative. Remember, I'm no financial advisor. I'm just someone that loves to find patterns and try to solve puzzles. Thank you for the likes, for the follows, for the subscribes, comments on Twitter and YouTube. And let's keep the chatter going up. I'm extremely interested to see what happens in Sunday night Eastern Time futures. For me, it's always interesting to wake up in the morning, grab that cup of coffee, and see if they're red or green. This is going to be an exciting week. It's pivotal, and we just got to fasten our seatbelts, and hopefully we don't crash and burn.